and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is our latest offering, What's Hot, a show that focuses on the biggest buzz on the day street today. On the show today, we're going to be focusing on the two new listings that you're seeing today of Nephrocare Health Services IPO as well as of the Park Medi World IPO as well. Both these stocks have got listed. You will soon get the live visuals from the National Stock Exchange as well, where the opening bell has just taken place. Well, for Nephro Health, it has debuted on the street. We have seen a 7% premium listing to the IPO price. The stock is listed at 480 rupees versus a 460 rupees IPO price as well. So that's where the positive listing has occurred. On the other hand, Park Hospitals, Park Medi World IPO has disappointed with the listing with about a 4% discount listing via the issue price or versus the issue price. When you see 156 rupees is what Park Medi World has got listed at vis-a-vis the issue price of 160 rupees as well. So that's where some disappointment has come in, but it's Nephrocare that has given about a 7% listing gain to investors just at the point of listing. Park Medi World right now at 160, so it's slowly and gradually climbed to the issue price after getting a discount listing there. Let's also look at the Nephrocare space as well, even though it's still down by about 1%. So Park Medi World climbing slowly and gradually, but still about a percent down in trade. Let's actually also look at how Nephrocare has debuted on the D Street. A 7% premium listing is what we have actually seen for the company in the trade today. And right now it is trading at 490 odd levels. This is up by about 6.5% now. Holding up to that kind of a move that it saw right in the opening trade as well. So we are going to be focusing on both of these and trying to understand with a market expert how should you be understanding all about this. We will also be focusing on the rupee weakness, although it's recovered a tad bit with RBI intervention today. We will also talk about oil prices that are now falling. In fact, for the first time since 2021, a $55 per barrel has been breached on the lower side. We will also be focusing on key stocks, Reliance Industries, Ola Electric, and why Apollo Micro share has fallen about 20%. Reliance Industries is back on the radar of brokerage houses like Morgan Stanley, and Ola Electric. The big question is, will there be any further promoter pledges, and the stock continues to see some pressure. So we are going to be focusing on all of that. Let's quickly welcome our guest on board. Prashant Tapsi from Mehta Equities is now joining in on the program with us. Prashant, good morning to you. Good to have you with us. Before we come to the key question on the markets, let's talk about the IPO space. Two new listings today. Nephrocare about 7% higher, and we've seen Park Medi about 4% at a discount, but right now it's climbing closer to the IPO price. What would you say?
Good morning, Sakshi, and congratulations for the awards you have won.
Thank you so much.
And it's really worth you will have these kind of awards and many more in future. So,
thank you so much, Prashant.
This listing, I think even last week we discussed about these two IPOs. They are very much decent companies in terms of their business outlook and all. I think valuations were slightly expensive, but again, the market mood was slightly not good for these kind of IPOs at this point of time. Among the two, I think Nephro Healthcare was the best among the good in terms of business model, where there is a healthcare focus and there is a good outlook for the company as well as in the industry. But again, the Park Hospital was some kind of expensive valuations. Plus, again, the way they were exposed towards the North Indian, there was high competition by other hospitals also. So both were decent. I think long-term investors continues to hold right now. But again, I think market is the culprit today again because of the market sentiments which were down from last 2-3 days. So I think that was also a reason why these two did not do well in terms of their listing gains. So continue to hold. My recommendation would be for the long-term only.
For long term only, all right. So that's as far as the IPO space is concerned, and that's where the focus should be. All right, let's actually focus a bit on what's happening on the macro level before we come to the other stocks in the secondary market. Macro level, let's talk about the rupee fall. Of course, we did see the 91 mark getting breached yesterday. 91.07, 91.08 was the kind of levels that we actually saw. Worst kind of a fall that we have actually seen in the last 10 days from 90 to 91. It was a swift slip that we actually saw on the rupee as well. But seems like today there has been some intervention from the RBI because the rupee level is now inching closer to 90 again. What exactly is your thought process when it comes to the rupee? Why the rupee is sliding so much? And what is the course ahead? What should investors remember when they look at the rupee?
I I think yes, from last 10 days, the way how FIs have sold out Indian markets, that would also be some kind of push to the weakness in the rupee. But again, the Japan meeting, which is scheduled on 19th, where there is an expectation of 25 basis plus interest rate hike, that can also be one reason where Indian currency is getting depreciated like this towards 91 plus. So these are the two reasons. I think that will be some kind of intervention more from the RBI, which will keep cooling down the rupee. But I think the heading towards northward will continue. RBI can only slightly help Indian markets to sustain, but I think the trend is towards northward to rupee going forward.
Okay, got that. Let's also focus on some of the other key aspects there. And I want to focus a bit on the kind of sectors that will be impacted. So, the pain point where the rupee impact will be felt vis-a-vis the benefits that will be seen as well. So, looks like the exporters, they are tending to benefit from this weak rupee at this point in time. Because they earn more in rupees vis-a-vis the dollar. So a booster for IT, for the BPO sector, the global services sector, pharma, chemicals, even textiles, specialty exporters as well. So those are the key spaces that we have to look at. Anything that you believe stands to benefit for a sustained period as well within the export-oriented sectors?
I think chemical should be a sector one should focus more on. There is some kind of neutral impact. They also have a lot of imports as well. But again, the export would be growing every year on quarter. So I think the new contracts which are going to sign between the chemical sectors with their clients, I think that will get a lot of benefit from the rupee momentum. So, but overall, again, the major benefit will go to pharma as well as the IT because of the majority of the business, almost 50, 60, 70% of the business in some companies are getting benefits out of export to this dollar impact.
Okay. Now the pain point, let's focus on that as well. Remember viewers, your imported electronics, your imported phones may get costlier for you because of this. Your foreign education, if you're planning to go study abroad and pay your fees at this point in time, it is going to cost you more. Your travel, in case you're traveling abroad, your travel bills will shoot up for sure. Higher input costs for many manufacturers. So back home, a lot of manufacturing industries may also have to foot the bill of higher dollar prices and lower rupee prices as well. Your fuel costs will get added, and your gas imports, crude oil, all of that becomes costlier, which is actually a major input cost for a lot of logistics or manufacturing units as well. So all of that will also lead to some kind of an inflation, and your budget differential there. So Prashant, how should one be really looking at all of these industries that actually depend a lot on, crude oil, depend a lot on any imports of the raw materials as well? How would you look at that?
In some way, I think crude going down towards $55, I think that is also giving some kind of neutral impact for the dollar rise. So that can be a nullified effect for the OMCs as well as the ONGCs or the oil companies. So I think that would be a neutral impact. But again, the OMCs may get some kind of impact, I think, because of the naked import of crude will have some kind of payment issues. So I think that can be a reason. But again, the way how crude has fallen down, that is also giving some kind of margin benefit for the OMC companies. So I see very neutral impact in terms of oil and gas as well as on the OMC side. But major impact would be on the where companies are getting imported electronics, and also those sectors will see some kind of major impact on their margin as well.
Yes, in fact, you rightly pointed about oil, which the falling prices of crude oil may kind of offset the impact, that we are feeling because of the weaker rupee. The Brent crude has slid 2.8% to $58.85 per barrel, viewers. The WTI crude has crashed below $55 per barrel. This is for the first time since February of 2021 as well. Now, remember, potential Russia-Ukraine peace talks are weighing on the prices at this point in time. Remember, in the last 3 to 4 years, we've been seeing some elevation in crude oil prices because of these ongoing geopolitical tensions abroad. So that's something that had been keeping, and of course the persistent supply had been there, and now the oversupply fears are also adding to these levels as well. How would you look at that, Prashant, at this point in time with respect to crude oil?
I think very neutral impact. I think that will be pretty much justified or nullified in the margin impact.
Okay, got that. Let's also now focus on the key stocks that we need your views on. A lot of stocks are in focus today. Let's start off with the top, valued stock as far as the stock markets are concerned. Reliance Industries, that's in focus because Morgan Stanley has come out with a report. Here they have an overweight rating, a target price of 1847. Current price is 1543. So a substantial upside is being projected by Morgan Stanley. They believe the $50 billion value accretion is seen across three building blocks of the company. Catalysts expected every quarter through 2026 as well. They also believe the RL has entered fourth monetization cycle. All verticals FCF are actually positive. The free cash flow is positive. They also believe the post-COVID capex of $80 billion is going to be starting to deliver returns now. They also expect re-rating and earnings upgrade to follow in 2026 for Reliance Industries. So let's focus a bit on that and try and understand and gauge your sense. And remember, as we enter into the new year 2026, the second half, all eyes will be on Jio's listing that has already been indicated by the management as well. How are you looking at Reliance Industries for the new year 2026? What should be investors' approach to this stock?
I think it's a portfolio stock. One should have it on a portfolio just to maintain a lower risk in terms of downside. So overall of the earning upgrade, I think yes, 2026. I am very much bullish on the next financial year where the actual capex which they have done from last 3-4 years will start giving some kind of EPS impact going forward. So that can create some kind of situation where a re-rating of the sector or the SA2P valuation of the say segments where Reliance is morely focused on. So I think overall valuations are very comfortable right now. I think the earning growth can be with a CAGR of around 15 to 20% on YOY basis, with a target of at least 17-20 can be a 1 year target from the current level. So overall very bullish on that, but it should be a portfolio stock.
Should be a portfolio stock. Any kind of targets that you would want to devise for our viewers if somebody buys the stock right now, like you pointed out that the valuations are comfortable. If one goes ahead and buys this stock for the long term now, for the next 1 year, what is the kind of upside that one can expect to get on Reliance?
So currently with this current P and price to book valuation as well as on the EV by EBITDA valuation, I think another 15 to 18% kind of return can be expected from the current levels for next 1 year.
Okay, 15 to 18% kind of returns can actually come in on Reliance Industries. The valuations are very comfortable. This is a long-term portfolio stock. A lot of triggers ahead that could actually bring the stock in back into focus yet again. All right, let's actually focus on some of the other stocks as well. These are the stocks that are actually coming under pressure. Let's talk about some of the new age stocks like Ola Electric. Remember, the stock had been continuously inching. Even yesterday, it was down by about 8%. It ended near the day's low. Even right now, if you see, it's hovering around the same levels. It ended yesterday at 34.2 odd levels. Now what's happening is that Bhavesh Agarwal has monetized part of its personal stake as well to release the promoter share pledges worth about 260 odd crore rupees to pay up the loans is what he has done. Now of course they have said that no further promoter pledges are expected. The funds have used earlier to seed AI startup Krutrim, and no dilution of promoter control is now being seen, at least for now. But let's try and gauge what is really happening at Ola Electric. Of course, this has been a kind of an IPO which probably will deter investors to look at any new age IPOs, because it came with a lot of promises, came with a lot of flying colors. It listed at 76, went on to 3 digits, 100, 150 odd levels, doubled investors' money in just about 5-6 days odd. But from that time on, it has only been a one-way downward slide. And now if you look at the stock price, in fact, it has halved from the IPO price as well. How would you really look at Ola Electric, and what would you tell viewers?
I think we all know what went wrong with the business segment. The way how this market share has been deterioratingly coming down from almost 50-60% to current 19 to 17%. So the industry has grown very well. There are a lot of high competition from the traditional players like Bajaj, TVS, and all. So that also created some kind of pressure in the company. But I think the story is still good. I think the way how their battery segment is getting implemented in their own vehicles, that we can create some kind of faster profitability in the next financial year. But again, what went wrong yesterday? Obviously, yes, Mr. Agarwal sold some kind of a stake to make sure the pledge share should not go into the market, which will create a lot of noise more than what he has sold right now. So I believe that is the right strategy what a promoter has done. But again, obviously, from an investor point of view, whenever a promoter sells in the open market, that creates some kind of negative impact. But I think instead of the pledge share getting into market, promoter selling and monetizing those shares into the market, and then getting those pledge revoked from the broker segment. So I think that is a clear best idea where a promoter can do. But obviously, the challenges are still remain same. The traditional market players are putting some kind of pressure in terms of market share. Obviously, when as soon as the battery segments get into place, that will really help the company to do better. But downside is again limited from the current levels. I think 30, 32 can be a range where markets can see some kind of pressure in the business as well as in the price. But upside is again open. I think if the battery segment successfully comes in and the profitability comes visible very soon, at least for next 15 to 18 months, so the stock can rally from the current levels.
Fair point. The last stock that we're going to be discussing on the show today again is which is in focus, and this is on the downside again. We're talking about Apollo Micro Systems. This stock has again declined about 3% yesterday. In fact, in the last 8 sessions, out of the last 10 trading sessions, it's all been with losses. The stock is already down 20% in the last 10 days trading period as well. Remember, the stock has now declined 35% from its 52-week high of 354, to which it had surged earlier in this year alone. Now, despite the fall from its recent highs, if you look at, the stock is still up 89% so far on a year-to-date basis. So it has fallen sharply from the peak, but it is still up 89%. So this stock was actually being seen as a big wealth creator. Now it's coming under some pressure, and therefore it becomes extremely important to understand what has gone wrong. This will be the 6th positive year for the company to post a positive return into the stock as well. So this has been a stock in the last 6 years that people have believed big on as well. What has happened is last week in an exchange filing, Apollo Micro informed that the company and the shareholders had rejected their proposal for approving related party transactions. The transactions were valued at 500 odd crore rupees. That saw 99.7% institutional shareholders vote against the proposal. The transactions were with each of the 3 group entities, Apollo Defense Industries, Apollo Strategic Technologies and Ideal Explosives as well. And the value of those transactions was nearly 90% of the annual consolidated revenue of the company, audited annual revenue of the company as well. So this was for FY25, which stood at 562 odd crore rupees. So that's the entire matter. Let's try and understand from Prashant what exactly should investors be looking at. So those investors who benefited from the early investment, they're still sitting on profits. There's no problem there, 88-89% odd. But for fresh investors who might be looking at last 5 years of a return and then looking at this fall as an opportunity to enter, what should they be doing?
So it's a right example where we always say don't look at the history because history never repeats. So the situations are changing so fast. If you see the way how the rejection from the shareholders committee has done a lot of damage in the company. Second, I think there is some kind of increase in the pledge percentage also from the promoter holding. Almost 32% of their promoter holding is under pledge. So there is a clear indication saying that there is some problem with the business structure right now. So my advice again, if there is a very decent losses at this point of time, I think it's a good clear exit from the current levels again. And the older investors who are making like 50 to 90% return, I think they should also decide something. There should be a limit of making profits and all. I think this is the time right now they should decide to take out their profits at this point of time. So my clear advice to near short term, I think that the stock will continue to be under pressure. And once we come up with a good outlook from the company post this Q3 earnings as well as Q4 earnings, then only we can revisit the stock.
Okay, got that. All right, Prashant, towards the end, help us with your view on the markets. What do you expect? We've entered probably the last 10 sessions of 2025. What exactly would you expect there?
I think coming few days again there will be a lot of pressure. Again, market should sustain about 26,000. That's the only way target which I am looking for. So this year there should be a close about 26,000. That would be a great level to see as a year-end closing. Otherwise, I think at 25,400 can be a level we can see in next 15 days because 19th is a day where Japan meeting is there. If that is creating a lot of noise with respect to the end trade sell-off. So US will be under pressure, Asian markets will be under pressure. So next 15 days, very crucial level for Indian markets, as well as there are high hopes of India-US trade deal. If that goes well this financial year, so next financial, at least next calendar year, the start will be very good for us. So overall, my outlook is very neutral, but slightly on the negative side.
Okay, fair point. Thank you so much then, Prashant, for being with us on the program What's Hot and for sharing with us your views on everything that's buzzing big on the D Street. Appreciate your time with us as always. Right, viewers, 25,844, we're about 15 points lower, so we are still toggling between the highs and the lows as far as the markets are concerned, still very volatile. Let's see how things pan out throughout the course of this session. Remember, today is the sandwich day between yesterday NSE contracts expiry weekly and tomorrow Sensex contracts expiry as well. So let's see how the things pan out for the entire trading session. Stay tuned with us, much more coming up on your screens on the markets front.